Hi, in today's episode, we're going to be talking about loan documents and programs, and our guest is Livier Becerra. Hi, everybody. I'm Jeff Barton for the Mortgage Voice. Thanks very much for tuning in. Listen, we have a great program today, and Livier Becerra is going to talk to us about loan documents and some of the programs that are out there. Livier, how are you?
I'm great, Jeff. Thank you. Thank you for having me. Well, the loan process actually is very simple. Some people, it sounds complicated if you don't know a lot about it. But for us, we know it very well and we can explain it. We'll try to explain it pretty easy today. So, when you start a loan, there's very simple documents that you need to start off with and to qualify. 1 month of pay stubs, 2 years W-2s, 2 years tax returns, and 2 months bank statements. So if you're purchasing, the tax statements will need to show where your down payment is coming from, which and your closing costs. Your proof of funds is what they call it. Your proof of funds, you can either show them by the bank statements. It can be done by a verification of funds by your bank, or if you don't have a down payment, then you can get a gift letter and gift funds from a relative, and that will help you to qualify. So your pay stubs, your W-2s, your tax returns, and I think that pretty much covers it all. If you're refinancing, then you'll need your mortgage statement as well as your insurance policy to show how much your insurance is to help qualify and calculate your payment. So that being said, there's with purchasing and refinancing, there's different types of loans that you can apply for. And actually, being a broker, we have a lot of options at our disposal. So I think the number one is for first-time home buyers. They like to apply for the FHA loan, which it's minimal down payment, 3.5%. You can get all of your costs covered either by the seller or by the gift funds or by lender credit. It's the interest rates are generally low, and it's easier to qualify with an FHA loan than a conventional loan. Their requirements of like credit is not as strict as a conventional, and they the banks like them because they're insured. Obviously you have mortgage insurance because you're only putting 3.5% down. The insurance covers the bank. It doesn't cover the buyer or borrower. In case they default, that insurance covers the lender. So then buyers will also have to have their home insurance. So their fire, in case somebody falls and slips and wants to sue them, so they're protected. Second, I would say conventional, obviously. Conventional, you have great credit, you get a great rate, your credit will affect your rate on a conventional. So if your credit isn't so great, you're going to want to stick with the FHA. If you got good credit, then you can get in with as little on a purchase as 3%. And then you'll have to have mortgage insurance as well. And that also, depending upon your score, will be higher or lower as well. Now, the conventional, if you put down 20%, though, you don't have to have any mortgage insurance. So that's actually a really good part of it as well. So you get a great rate, no mortgage insurance, and so but that one is a little more requirements, credit requirements. So obviously you can't have a foreclosure for 7 years, a short sale for 4, and a bankruptcy for 4, I believe. But FHA does allow for 2 years when you can go ahead and reestablish yourself. So, wow, there's so many loans right now that are coming back after COVID. Also, another great loan for our military, our veterans, or the VA loans. The documentation is the same as the rest of them. You have all the income documentation and whatnot, but They have the opportunity to put a zero down payment for to purchase a home, and also they don't have to have any mortgage insurance, even with zero down payment, which is the beauty of that loan for them. I think it's a great loan for the military. Should be they should use it as much, take advantage of that opportunity. But also, when you want to refinance an FHA and a VA loan, if what we do is called a streamline, then you don't have to show any income. It's a very simple process. You just need your mortgage statement, your insurance, just to get the ball rolling. And as long as you've made your payments on time, you're good. It just is a very smooth process. So that's also something to consider for persons who have a VA or FHA.
Thanks very much, Livier. I appreciate it very much. We want to have you back on the show to talk more about what's going on in the loan business and all the programs. And if anybody's out there and they obviously want to hear and see more of you and of the show, please click on the like button, join button on YouTube, Facebook, wherever you see these videos so that you can get more. I'm Jeff Barton for the Mortgage Voice.